Warren Buffett, also known as the Oracle of Omaha, is one of the most successful investors of all time. He's built his fortune through his investment company, Berkshire Hathaway, and has a net worth of over $100 billion. But what makes Warren Buffett stand out from other successful investors? In this video, we'll explore the key qualities that have contributed to his success and made him a legendary figure in the world of finance. 1. He's super smart. Warren Buffett is considered super smart with a high IQ that allows him to cut to the core of a question, reach a well-founded conclusion, and hold that conclusion even if things initially go against him. He is fiercely analytical and incredibly quick, not needing weeks or months to reach a conclusion. He has a great sense for which data points matter, and his ability to be business-oriented and have savvy or street smarts is just as important as his intelligence in making him a successful investor. 2. He's guided by an overarching philosophy. Warren Buffett is guided by an overarching philosophy that involves knowing what he doesn't know, sticking to what he does know, and leaving the rest for others. He only invests in industries he understands and feels comfortable with, emphasizing fairly prosaic fields and avoiding high-tech companies. He passes on things that are outside his philosophy and can live with the possibility that the things he passes on will make money for others. This is in contrast to many investors who believe they can master anything and constantly retool and learn new tricks to adapt to a constantly changing world, preventing the development of specialized expertise and helpful shortcuts. 3. He's mentally flexible. Warren Buffett is mentally flexible and understands the importance of knowing when to change and when to hold fast. He adopted the approach of his great teacher, Ben Graham, early in his career, but switched to emphasizing high-quality companies with protective moats and pricing power at reasonable prices, with urging from his partner, Charlie Munger. He was able to overcome his bias against capital-intensive companies to buy the Burlington Northern Santa Fe Railway and take advantage of its economic sensitivity coming out of the 2008 financial collapse. Warren believes that a philosophy should supply guidance but not rigidity, and is able to navigate the tough dilemma of adapting to changing circumstances without letting his thinking get stuck in cement. 4. He's unemotional. Warren Buffett's unemotional approach to investing is one of the key reasons for his success. He understands that emotions can cloud judgment and lead to irrational decision-making. He remains focused on the long term and doesn't let short-term fluctuations in stock prices affect his investment decisions. This allows him to take advantage of buying opportunities when others are panicking and selling. Additionally, he doesn't let envy or peer pressure influence his investment decisions, but rather stays true to his own philosophy and principles. His ability to remain calm and objective in the face of market volatility has served him well over the years, allowing him to make rational investment decisions and generate outstanding returns for his shareholders. 5. He's contrarian and iconoclastic. Warren Buffett is indeed known for his contrarian and iconoclastic approach to investing. He has famously said, "Be fearful when others are greedy and greedy when others are fearful." He looks for value in areas of the market that others have overlooked or dismissed, and he is willing to hold on to investments that may take years to appreciate and value. He also avoids investing in trendy, high-flying stocks that are popular with other investors but may be overvalued. Instead, he seeks out solid, well-managed companies with a durable competitive advantage that are trading at a reasonable price. His contrarian approach has often proved to be successful in the long run. 6. He's counter-cyclical. Warren Buffett's investment strategy is counter-cyclical, meaning he prefers to invest when the market is down and companies are undervalued. He believes that the greatest bargains are accessed by buying when the economy and companies are suffering. This is emotionally difficult to do because it requires going against the herd and buying assets that are currently out of favor. However, Warren Buffett has repeatedly demonstrated his ability to do so, as evidenced by his investments during the 2008 financial crisis in companies like Goldman Sachs and General Electric, as well as his purchase of Burlington Northern for $34 billion in 2009. Despite the fear and uncertainty of that time, Buffett saw the opportunity and made bold moves that paid off in the long run. 7. He has a long-term focus and is unconcerned with volatility. Warren Buffett's focus on long-term investing and his unconcern with short-term volatility are among his most well-known characteristics. He has consistently emphasized the importance of investing in high-quality companies with sustainable competitive advantages and holding them for the long term, often for decades or even indefinitely. He has also stressed the importance of being patient and not letting short-term market fluctuations or economic conditions dictate investment decisions. This approach allows Buffett to avoid the costs of frequent trading, including taxes and transaction fees, and to benefit from the compounding of long-term gains. It also enables him to take advantage of market downturns, which he views as opportunities to buy high-quality companies at discounted prices. By contrast, many investors are more focused on short-term gains and are more likely to sell when markets decline, leading them to miss out on potential long-term gains. 8. He's unafraid to bet big on his best ideas. Warren Buffett is not afraid to invest heavily in his best ideas, and he takes a different approach to diversification than many investors. Rather than spreading his investments across many different companies to reduce risk, he focuses on a small number of high-quality companies that he knows well and in which he has a high degree of confidence. He believes that this approach reduces risk and increases potential returns. This also allows him to invest for the long term and to compound his gains over time. 9. He's willing to be inactive. Warren Buffett's willingness to be inactive is a key trait that sets him apart from many other investors. He understands that great investment opportunities are rare and that it's important to be patient and wait for the right one. He is not afraid to turn down deal after deal until he finds the one that he believes is compelling. This is similar to baseball legend Ted Williams, who would wait for the perfect pitch before swinging his bat. Buffett's approach is in contrast to many investors who feel that they need to constantly be making investment decisions and are always searching for the next big thing. By being willing to be inactive, Buffett avoids making rash decisions and instead waits for the right opportunity to come along. 10. Finally, he's not worried about losing his job. Warren Buffett is not constrained by the fear of losing his job or clients, which allows him to take bold and unconventional positions in his investment strategy. He is willing to be inactive for long periods of time until he finds compelling investment opportunities. He focuses on investing in great ideas, bets big on them, and holds on to them for the long term. He does not follow standard diversification dogma, but instead concentrates his portfolio in his best ideas. His ability to follow up his intellectual conclusions with action, without fear of embarrassment or being fired, allows him to dare to be great in his investment decisions. So there you have it, the qualities that have made Warren Buffett one of the most successful investors in history, from his unwavering focus on value investing, to his ability to remain patient and disciplined in the face of market volatility, to his commitment to lifelong learning and continuous improvement. There's much we can all learn from his approach to investing and life. Thank you for watching, and please feel free to leave a comment below sharing your thoughts on